What is up, everybody? So I got a question from somebody on my Learning to Read Order Flow for Beginners Part 2 video series. Somebody asked, absolutely loving these videos. Thank you. Finished the jigsaw training, and this is really helping to tie everything together in a much clearer way, so thank you. Question I have on the tick drill. Say I get into a trade and it goes straight one tick against me. Do I just flat and get out, or can I wait for the tick to go up to break even / profit? Essentially, is the aim to get an immediate winner only? I get this question a lot, okay? First and foremost, you're asking the question on episode 2. So I need to understand, are you aware that there are 3 episodes in the series? So you are asking on this video here, episode 2. Start with episode 1, episode 2, episode 3, or part 1, 2, 3. I know it's long, I know it's 3 hours, but I'm pretty sure I cover exactly what you're asking in it. However, and this is by no means trying to be rude or anything, okay? So I just don't know, did you watch all 3 of those? And did you watch them back to back to back? Okay, so, and I'm getting this question a lot. A lot of people are asking, what do I do when it goes against me? So this is not at all aimed towards you, but there's a lot of confusion with tick drills, and I feel like maybe I didn't make those 3 episodes clear enough. I thought I did. Then again, I made them so long ago that I don't remember exactly what I said in each video line by line. So here's the thing. Tick drills, and let me pull up your question again real quick. So I'm going to read just that last part again. Essentially, is the aim to get into immediate winners only? No. That is not the point of tick drills. And again, this is not aimed towards the person asking the question. This is a common question I keep getting from multiples of people, so this is for a group of people that are getting confused. The point is not to get into a win. The point is not to win. You're not going to do good on tick drills, and that is completely fine. So what's the point of tick drills? To read order flow better. The point is to read order flow. To try to read the order flow and try to pick up a tick based off what that order flow is telling you. That is the point of the tick drill. So here's the thing. It is not about a win. It is not about a win. It is not about a win. I want you to really drill that into your head. Everybody that wants to do this. Not just the person that's asking. Drill it into your head that the point is not to make P&L. The point is not to make a win. The point is to read order flow. Learn to read order flow, because reading order flow is difficult and you must start somewhere. And this is a fantastic exercise to learn not only how to read order flow, but to learn how to execute order flow on a DOM. So another thing that was brought up in the past was somebody told me they were limiting in and then they were marketing it out, and they were just getting break evens, and they didn't understand why. Okay, if you don't understand why, you need to watch this video. Limit order versus market order with trade examples. Watch that video. The reason I say watch that video is because limit orders and market orders are 2 different order types, and you must understand where you're clicking on the DOM and which one of those boxes on the jigsaw DOM is the limit order when you click on it, and you must understand which one of those boxes would be a market order. You must understand how the pros and cons of both of those order types, because they're different, and you shouldn't be using one of the order types. You should be learning how to use both order types. Now, in the order flow for beginners series, that 3-part series, I talk about how you want to use limit orders, but if the trade is not working out, you can use a market order to break even. Again, somebody else told me, hey, I'm queuing into the trade, And then when I mark it out, or when I hit the flat key, he said specifically. So I'm limiting in. When I hit the flat key, I think I'm making $12.50, but I'm not. I'm making a break even. Yeah, because a flat key is a market order. So you must understand when you're hitting a flat key, that is a market order that is neutralizing your position. So if I buy, I must sell to get out of the trade. When I hit a flat key, that is essentially knows that I bought, so I must sell. If I sell when I get into the trade and I want to go short and I hit the flat key, it automatically knows that I've sold, so therefore it's buying back, thus neutralizing the trade if it does not move a tick. If you want to pick up a tick, you have to limit in, limit out. If you limit in and you don't think that limit out is going to get filled, then hit the market and then it should go break even, okay? So you need to learn how to use both order types. Sometimes the market gets so volatile that a market order is a really good idea just to exit the trade, even if it's a really good win, because it's moving so quickly. So do not handicap yourself with the one type of order. Part of this drill is just to understand where are you even fucking clicking on this thing. Because you might think you're getting out of a trade, but then you start adding more contracts to your position because you're clicking on the wrong sell on the depth of market. So part of this drill is just to understand the difference between those, okay? And to start to kind of build out the muscle memory to where you know exactly where you want to click without really thinking, okay? So that's another advantage of the tick drill. That is the point of the tick drill, okay? I need to learn how these order types work. I need to learn muscle memory where I need to be clicking. I want to know that as soon as I get in, I got to go to the other side of the DOM to get out, and vice versa. If I get in on this side, I got to get in on that, out on that side. Blue in, red out, red in, blue out, or whatever color your DOM is, okay? So whatever color I'm getting in on, I got to get out on the very opposite color. So that is part of it, okay? Another part is to not have charts up. I'm pretty confident I said this in the other videos. Do not have your fucking charts up. Do not have your fucking charts up. No fucking charts up. Because some people are like, well, what if I just use, Jigsaw's Auction Vista? No. Do not have it up. Do not have it up. You need to learn how to read order flow to the point it starts to kind of make sense to you. Okay? Another advantage of this exercise is you're going to learn how to get faster at moving around and getting in and out, getting in and out. You're learning how to get quicker at it. Because being fast at trading has its advantages. So no, the point of this is not to get into a winner. The point of this is so much deeper than getting into a winner. Okay? And this is, I know I'm coming off real strong and stern here. This is Coach Fat Cat coming at you, okay? So, and just, I'm projecting it with this type of energy so you get what I'm saying. So you understand what's going on. Again, this is not me trying to be malicious or mean or anything like that. I just want you guys to understand, because maybe I didn't do my job right to begin with and didn't teach it, or you guys are simply not watching them in order. And if that's the case, you guys need to do that. So you need to do your part, and if I can do my part better, I will attempt at explaining shit better, right? So with that being said, some traders, and this I think this is a common fucking theme. You guys are just looking at it moving up and down. You're not even reading the order flow, and you're just trying to nail a tick on a DOM based off of how the price is moving up and down. Okay? You're fucking yourself, man. That does you no good. Yes, you can learn, the difference between a limit order and a market order. But that does you no good, and I'm pretty sure in one of those videos I talk about how you should read your time and sales, have time and sales up. Have a time and sales window up. I talk about it. Okay, at least I think I did. Have a time and sales window up. Okay, have your limit order columns and your market order columns. If you want to change that stuff and fuck around with it later on in your trading career, that is fine with me. But for now, it's probably best to do it the way I fucking tell you. And if you guys are going to come and ask me specific questions, well, let's try to do exactly what I'm showing you the way I did it. Okay? Because otherwise, if you're asking me questions and you're not looking at time and sales, or you're not processing these market orders coming in because you don't have a market order column up, well, shit, dude. I don't know what to say on that front. So, again, I really do think a problem is too many fucking traders are trying to get a tick. You're trying to get a fucking tick. You're not doing good at this drill. You're going to come out. I can't even fucking do it and just, like, win all the time. Most of the time, I take on heaps of losses. But again, that's not the fucking point, right? It's like a fucking baseball player. A baseball player goes to the batting cage. Are they trying to win the fucking game? When they go to a what game? It's a fucking drill. Going to the batting cage is a drill to work on your techniques. To learn on holding the bat in a specific way. Am I swinging the bat in a specific... What are the mechanics of my movement when I am trying to hit that baseball? Am I hitting it a little too soon, a little too early? What are the mechanics of me hitting this ball? It's not about smacking every fucking ball to smack every ball. That is not the point of going into the fucking batting cage. So the point of going into the tick drill is not to hit every fucking one tick win. That is not the point. The P&L does not fucking matter. Alright? And too many traders are looking at it just ticking up and down. And they're not reading the order flow and they're just trying to hit a tick. And then they're hitting ticks in fucked up spots. If you get good enough at a tick drill, you'll know there are certain times where you simply can't even do a tick drill. Not all environments are even suited for tick drills. So I believe in part 3 of that series, I believe I show you good volatility, bad volatility, or volume. One of the two. So I show you 2 different conditions, and I know that for a fact, and I believe it's part 3. It's in one of them. I show the different conditions, like a condition shift. You're not going to be nailing a tick drill in every environment. Currently, the market is so fucking volatile that it's going to be tremendously more difficult to even hit it right on the spread. Right? You might have to sit there for 10 fucking minutes trying to hit a 1-tick win. You're not to be sitting there just clicking the fuck away at the button, right? You're not to be just clicking away at the button trying to nail a fucking tick. That is not the point, and too many traders are doing this, and the person that asked this original question I'm answering, I'm not accusing you of doing this. I am not accusing you of doing this, but this is a common theme that needs to be addressed, and hopefully by me addressing it, it makes sense to you that maybe your thinking of this drill needs to shift a little bit, right? That hopefully this is a perspective shift. So, again, the point is to read that time and sales, and if you're doing what I suggest, which is chopping your time and sales up, you got retail and mid-size, assuming you're doing it on the ES. If you're doing this in another market, I don't know what to tell you, because it's going to be fucking really difficult, if not almost impossible, to do a tick drill in something like the NQ. You want to constantly have a flow of volume. You want it to be thick enough that you're not going to just have the price blow out. But unfortunately, not every environment is good. Now, even though we're in high volatility environment, that condition is constantly shifting. There are periods in the session where the volatility slows down and you can actually do the exercise. And part of the exercise is identifying when a tick drill actually might work. Why? Because when you go into your legitimate trading strategy, when you evolve and grow as a trader, right? There are specific condition shifts where you should be trading and when you should not be trading. And understanding that concept with the tick drill, when it works and when it doesn't work, and what to look for and what not to look for, and being very particular and waiting 10, 15, 20 minutes just to pick up a fucking tick, that skill set can be taken and applied to your legitimate trading. Otherwise, and that's helping you understand these condition shifts in these different environments, because the market is constantly shifting. I have a video called Sweet Spot. I need to organize everything at some point so that way you guys can just watch shit in, like order. I have a video. I have two videos. I have this one called Sweet Spot. Watch that. And then I made a more recent one called Sweet Spot 2. Right down here. Watch that as well. I think one of the hardest concepts of trading for any trader, and even me, it's difficult at times, is identifying shifting conditions and adapting to them. And those two Sweet Spot videos I posted, watch them. A lot of what I share are unique little lessons, and unfortunately it's not all smashed together in order. And if you guys are watching shit out of order, you're just missing context, right? And the way I uploaded shit is not in order, so, But that's the thing. Those are videos I suggest watching in conjunction. So that's a lot of hours of video. But hopefully if you watch them all and kind of stick it together, it will make things make more sense for you. And again, what I'm trying to say about the Sweet Spot videos is the condition shifting is very hard. A lot of traders are not aware that this is happening. A lot of traders are not aware that you're having these constant condition shifts. So by me saying the volatility is really high right now, tick drills are difficult, doesn't mean volatility is at this specific tempo, this specific rate of speed. It's high now, but there are constantly these periods, these micro periods, where it slows down and the tick drill will work. There are times where the volatility is like this, there's times where it's like this, but overall, the broader picture is it's relatively high. But if we zoom in super narrow, that is constantly shifting. On the open of the market, the volatility and volume is at the highest, right? And then you can look at a volume histogram on a normal chart to see this. At the open of any session, you have high volume, and then as it goes in the lunch period, it tapers, and as we get closer to the close, the volume starts to increase, right? So that volatility and volume is constantly shifting throughout the session in specific areas. And if you can identify right where the tick drill might actually work and you're not going to get fucked up because it's moving like this, right when it starts to get stuck and really start to flutter around and you're seeing healthy two-way volume, then that's when it works. And understanding and waiting for just a tick in those specific conditions will allow you to carry that skill set into your legitimate trading, because when you do your legitimate trading, and I've already said this, but I will say it again because I need to repeat myself with a lot of what I'm saying. That skill set is going to help your legitimate trading, because now you're going to start to develop the skill set of waiting for the right moment to strike, okay, instead of just hitting in weird spots. And understanding this concept with the tick drills is allowing you to build awareness. Awareness is key because shifting environments, shifting conditions is so fucking hard for new traders to grasp because you guys are not even aware of it. You guys are not aware when it goes from very high volatility to low volatility, and you're sitting there trying to do the same thing over and over, but what you didn't quite grasp is like, holy shit, this is not trading the way it was 5 fucking minutes ago or even a minute ago. Things just changed. There was just a paradigm shift in the volume and volatility. So therefore, my approach must be different. So that is part of the tick drill. Okay? It is not to pick up a fucking tick. This can be very in-depth. This is a very in-depth look at this exercise. Okay? And there's so many things I'm listing off that is going to help build your skill set in this type of thing, right? It's nothing to do with fucking P&L. It's about building awareness for shifting environments. It's about learning to read the order flow. What is the tape saying? If I look at my tape and I have mid-size tape and I talk about mid-size tape, okay? I have another video, but you may or may not need to watch it, but it's a good one. This time and sales video right up here, I talk about why I cut my tape up. I run 3 times in sales. And then finally, you must really definitely watch this one. Where is it? And then I'm just kind of listing off stuff. The strike zoning video right here. It's very important. In that video, I have my DOM and tape laid out in a specific manner for a specific reason to make reading it more efficient and quicker. Pay attention to that. So I just listed off a whole shitload amount of videos, probably several hours worth, and I know that it's going to be hard to sit through that, but how serious are you about trading? Are you serious enough that you're willing to actually consume content? This is free fucking content. And if you look at these orders in a specific manner, it's almost like a free fucking course online, okay? When I first started this channel, I wanted to just post videos that were very specific, very unique lessons, and I wanted this channel to be treated as not really a course, but it can be looked at that way, okay? Obviously, I have the Flow State series, which is just a kind of a fun montage series. But anyway, sorry to go off on a tangent, but I've linked some really good videos that all kind of relate and interlace so you can understand what's going on. Now, back to the time and sales thing, I want to watch my mid-size trade. If I'm seeing a whole shitload of buyers hitting, say, the price of 50, 20, 30, 40, 50 lot keeps hitting the price of 50, but we back off that price and drop back down, if we go back up to the price of 50, then those buyers, and if we only drop off a little bit, okay, let me rephrase this. So we're trading at the price of 50 and 49.75. And I'm looking at the DOM. I have a bunch of buyers, 20, 30, 40, 50 lots, hitting the price of 50. If we drop down just a little bit and we come back up, there's a chance those buyers are going to want to hit there again. Why? Because those are larger buyers. They're hitting market orders. Market orders are statistically the worst price to hit on the spread. The limit order has an advantage, being the better price on the spread. Okay? This is why it's important to always limit in and always limit out if you can. A market order is used for emergencies, such as breaking even. The problem with the limit order is you have to wait in a queue to get filled. And it's important that you guys have a good demo where you are forced to wait in a queue on the limit orders, okay? And the gentleman that asked this question is on Jigsaw, so you're waiting in the queue, and that's really good. So the market order, I don't need to wait in the queue. I can hit it immediately. So I rather wait to get in and cut it immediately if it's not working. Okay? Instead of trying to get in immediately with the market order and then have to wait the queue out for a break even. I rather be able to cut it sooner when it's not working than wait to, get out. So if I'm seeing people, large traders on the time and sales hit the offer at 50, that's telling me they can't get filled on 49.75. That's telling me they're not willing to work the limit order, and they much rather hit the worst price on the spread. So therefore, if we come off that price a little bit and then come back up, they're probably going to hit it. So what I can do is queue up in 49.75 and then immediately try to queue out at 50, and hopefully those larger traders start smacking that offer and immediately get me the fuck out, right? And if we have larger buyers hitting 50, but we don't really have larger sellers hitting 49.75, then there's a better chance it's not going to go against me a tick. So again, the point is to actually try to read your time and sales. Try to read the order flows. What does it look like? I give out plenty of tips and tricks when it comes to reading order flows throughout a lot of these videos that you can use to apply to this. So to answer your question, if it just shits against you immediately, flat out, just cut the fucking trade. Don't sit there and wait for it to come back. I see too many people, and this is another problem. I see too many people who are letting the trades go 3, 4, 5 ticks against them, and then they're only picking up a 1-tick win. That is fucked up, because what you're doing is you're training yourself. You're essentially in really bad RR trades. Your risk to reward is not good, right? So if you're, you don't want to risk 5 to make 1. And again, the point of the drill is not to do that. The point of the drill is not to take good risk-reward trades per se, but it kind of is at the same time. It's to learn how to manage the trade. Because in my opinion, as soon as you get into the trade is when you're in control of it the most. The tick above you, the tick below you is where you're going to be in the most control of the trade. Beyond that, you put the trade on. Beyond that, it's either winning or it's losing. But there is a narrow window where you are in control of the trade. Okay? And your job is try to manage it. So ideally, you want to take break evens. So what you can do is limit in, get filled, work the limit out. Notice your price in the queue, and if it's not getting filled and those larger buyers are not hitting it, but you're starting to see more market orders hit your entry price, then smack that fucking break even and just cut it, okay? So when you get into this trades, you should have a timer go off, a mental timer in your mind. As soon as I get in, this thing needs to work its way out relatively quickly. If it's not filling me on the exit to pick up a tick quickly, I need to start figuring out how I'm going to get the fuck out of this. Should I mark an order out now, or should I give it a little bit more time? This is taking entirely too long. Let's just fucking cut it, okay? And again, if the fucker blasts against you 5 ticks, just hit the flat key, have a flat key on a hotkey, and just get the fuck out of it. What you also need to have on a hotkey is a cancel button. So if you're getting into the trade and it's not filling you very quickly, you should cancel it. Especially if the price comes down, puts you further up in the queue, but you don't get filled. And if the price bounces up, you better cancel that, because if it comes in again, there's a high probability it's going to just blow through there. Okay? And what you need to do is reposition. When you start to get decent at tick drills, again, I'm no pro at them, but when you start to get decent at them, you're going to learn how to cancel trades more often. You're going to learn how to really work that cancel button. So you don't, as a trader, you don't want to limit yourself to just one order type, whether it be limit or market orders. You want to learn how to use the flat key. You want to use how do you use both market and limit orders, and you also want to learn when you should be canceling the order because you're not getting filled. You also, really the crux and the point of the tick drill is to learn how to read some order flow, because if you get good at attempting to predict the next tick or a little better about it, it's going to give you a slight edge. It's going to give you a free peek, if you will. So it's a lot easier to predict the next tick than it is the next 2 ticks, next 5 ticks, next 10 points. The next few seconds are going to be a lot easier to predict than the next 10 seconds. So, and that's why I talk about a mental timer is going off in your head. So hopefully that answers a lot of the questions. If it goes against you, it goes against you. But don't be stiff. You can't be stiff. It's like somebody who's playing baseball and they're about to fucking hit the ball with the baseball bat. You don't want to sit there and be stiff. You need to learn how to be fluid. You need to start to develop that mental timer skill. You need to start to develop when you should start pitching these tick drills, when the environment is right, and you should learn when not to do it. So this is a very in-depth and advanced stuff I'm talking about, because a lot of people that talk about tick drills, it's too stiff, it's too narrow. They're not really diving into how you can use it to exploit specific skill sets and techniques, which once you start to work on that, you can take it into your real trading, and that's going to help you substantially. And I'm telling you this shit because I swear by it, I preach by it, and this is why I'm so pretty fucking fast. If you watch me take trades, I'm relatively quick at what I'm fucking doing. I try to keep my risk as tight as possible. And it's not because I just got good at picking up ticks. I never got good at picking up ticks. I got better at doing the drill, but I never got to the point where I can just print good fucking P&L on a tick drill. And that's the thing. If I do decide to start sharing more tick drill videos, and I might consider it at some point in the future, not right now, because I have a shitload more content I would like to put out before that. When you watch me do a tick drill, you cannot judge me on losing. You have to really listen to what I'm saying. Oh, there's large buyers hitting here. They might hit there again. Let's queue up right below where they're hitting and see if they can hit it. Okay, we have two-way volume. So little shit like that. Oh, we have two-way volume. That means you have market orders hitting on both the buy side and the sell side at the same time. If you have market orders only hitting one price and it's barely hitting the next price above or below, that's a problem. That's going to make the tick drill a little too hard. So just really, really nitty-gritty, nuancy shit like that is where the tick drill shines. Again, not P&L, not winning, not watching, just trying to pick up a tick. It's all of this other shit. There's probably other stuff I fucking forgot to mention. One thing is, you got to keep your mouse close to the spread. You don't want to get in the trade and then put your mouse fucking 3 monitors away, and then all of a sudden it's not working out. Now you got to scroll the fucking mouse all the way back and start to click on the DOM, okay? And you want to get good at using your mouse. You want to get quick at using your mouse, like a video game, if you will. Learn that mouse control. Learn how to get quick at moving it around, pointing and clicking. I don't think you should use hotkeys for limit orders and market orders. I don't think that's a good idea. I think you should learn how to use the mouse, but that's totally up to you, because if you can get good with hotkeys, more power to you. But I don't know. I suggest learning to get good with the mouse and learning to keep your mouse cursor in that strike zone. Okay? Don't let the mouse drift. Okay? Maybe you're too jumpy on the mouse. Maybe you're clicking in the wrong spot. And again, this is the same thing. These are the same things a baseball player does when he goes into the batting cages. He's not thinking about just hitting the fucking ball to hit the fucking ball, dude. He's thinking about hitting the ball, but he's thinking about techniques, specific techniques. Hit it a little sooner, hit it a little later. And every time you fail in your tick drill, you need to go rewatch a recording of it. You must record it and see what happened. Because if you're taking trades and you have no fucking idea what's happening in the order flow, you're wasting your fucking time at that point. And you might as well not even do these tick drills. So you need to go back and watch it. Is there something in the order flow that made sense to why this trade worked or failed? If so, what is that? So, with that being said, hopefully that answers your question. That's probably more than what you bargained for. So again, the question is, I have on this drill, say I get into a trade and it goes straight 1 tick against me. Do I just flat it? So when it goes a tick against you, what you need to do is limit out on the other side, and it should be a break even. So if I limit in here, the market ticks down, then I can limit out for a break even. So try to limit out for a break even. If I limit in and the market doesn't tick down, but I don't think I can get a tick win, then you can mark it out for a break even. So the moment it ticks down against you, you cannot mark it out anymore because it will be a 1 tick loss. You're going to have to limit out. So try to break even if you can. If you can't, then attempt to take a 1 tick loss. Do what you can to try to minimize it. And the thing is, when it ticks down against you, treat it like you're just getting into the position, except for theoretically you're getting out. But watch that order flow. Can I get in? Can I get out here? You know, do I need to take a tick loss? Do I need to take a 2 tick loss? Can I get out for a break even? Do everything you can to minimize the loss as best as you can. Okay, and don't just mark it out as soon as it goes against you. Because when you mark it out as soon as it goes against you, you're taking on a bigger loss monetarily wise, that if you can limit out when it goes against you, it's going to minimize your loss a lot better. And just really understanding the importance of that spread and how it works and how these orders are interacting with each other. So again, he says, what do I do when it goes against a tick? Do I just flat out, or can I wait for it to tick up to a break even? Again, it doesn't need to tick up for a break even. You can limit out. Essentially, is the aim to only get immediate winners only? No, it's not. And I think this video addressed what this really is. It's not to get winners. It's to learn how it's to learn all these different techniques. When to do it, when not to do it, mouse control, everything. That's the point of this, not winning. And the moment it just shits against you, flat it, cut it, you're resetting. And when you do that, when you just cut it and reset, now you're looking at the next tick drill or the next trade from a fresh perspective. And that's a problem with a lot of traders, is when they take a trade and it didn't work out, or it worked out really well, they're thinking about that last trade, and they're going to bring that, especially if it's a loss, they're going to bring that loss, that thinking, that thought process, that feeling, that emotional feeling into the next trade. And that's really doing yourself a disservice. You literally have to wipe your brain very clear of what just happened. And that's a lot harder than it thinks. And when you're doing this tick drill, it allows you to cut it if it lost, and it doesn't even fucking matter. It doesn't even matter. And you need to tell yourself that. It doesn't even fucking matter. Where's the next? And you're not trying to get it back. So this allows you to not revenge trade. So taking on a big loss in a tick drill is good. It's good to fuck up in the tick drill because it teaches you to go into the next trade without this revenge mindset of, I need to get that back. I need to get that tick back. I need to get those 5 ticks back that I just lost. No, cut it, reset it, because it's a fucking drill. It doesn't fucking matter. And that's teaching you an important lesson. That fucking failure right there is teaching you the importance of just fucking forget about it and look for what makes sense and hit the next best opportunity, even if it takes 30 fucking minutes. If you take a loss on the tick drill and it takes you 30 fucking minutes and you only pick up a tick in 30 minutes, even though you just took a 5 tick loss, that's good. Yeah, I'm still technically down, but it doesn't fucking matter. What it's teaching you is the importance of sitting there and wiping your mindset of what just happened that is so fucked up. I lost. It doesn't matter, and just understand this shit when you go into it. And I think this is stuff I haven't addressed in these original videos, so this is probably a good complement to them. And this is a fucking 39 fucking minute video. So now you have even more content to consume to help you better understand what's going on and why this is so important to me and what information you should be extracting from it, and learn skills and techniques that have nothing to do with fucking winning or P&L. The fuck ups are good because we're learning from them, okay? So hopefully you guys enjoyed that video. Hopefully this clears something up with the Tic Drills, because this has been an ongoing issue with a lot of people who are constantly asking me this. I love the fact that you guys are attempting to do Tic Drills and trying to, but please, let's look at it from a different perspective. And what I suggest is go back to this video and write down different things that I mentioned, like being aware of shifting conditions. Write stuff down that I am saying in these videos that are really sticking out to you, and focus on that shit. And for those of you who do want to get into Tic Drills, Jigsaw is a great platform for it. If you'd like to save yourself $30 on it, please use my affiliate link below, and I have a coupon code that really helps the channel out. I would appreciate that. Anyways, guys, check out my other order flow videos for beginners. If you've not seen them, watch them in order, and we will see you in the next one.